All right, welcome back to the channel. And so the question is, am I crazy for having $222,000 in my Composer account in a ticker UVXY, which tracks the VIX? So let's come over here. So you can see presently, I still have $184,000, which is 50% of the Composer portfolio in UVXY, which tracks the VIX. But I also have a significant holding, almost 75,000, actually it's 73,301, about 20% of the portfolio in BIL, which is essentially cash, a proxy for cash. It's short-term treasuries. And I didn't have that when I had the 222,000. That was 63% of the portfolio in UVXY last week. So just a quick synopsis. Many of the third generation Discord strategies, many of them use an overbought check. Now, let me back up a step here. For those of you who don't invest in Composer or don't invest in kind of the third generation Discord strategies, this might be a little too inside baseball, a little too technical, but I'll keep it as basic as possible. And I believe that I can explain in a way that pretty much everyone would understand this. So there's an overbought check in many of the symphonies. So what's fascinating is even though the symphonies, say you're running 100 different symphonies and many of them are doing different things and trading different tickers, if all of them or nearly all of them have this particular overbought check, well, then you're going to have a high concentration when this occurs, no matter what other logic that particular symphony is running. So there's a strong correlation to that overbought check. So just to look at it directly, let's shift over here to this particular symphony here. And this is one in particular that's done quite well here. It's one of the TQQ or not. You can see it's in BIL and UVXY. So this is the particular overbought check. And I'll explain what it means in a second. So if the 10-day relative strength index of TQQQ is greater than 79%, own UVX and BIL. I actually edited this and added the BIL. Previously, this particular symphony was 100% in UVXY, and I added BIL in certain symphonies. And then in other symphonies, I deleted UVXY entirely and added BIL, which again is a proxy for cash. That's why my percentage is down from 63 to 50. I might even bring that down a little further, down to like 35, 40, 45. I'm okay with the 50. It's still a little high to me, but that 35 to 45 might be the sweet spot for me. Well, let's get into the nuts and bolts of this. So relative strength index. That's an indicator that many investors and traders use to see if a particular asset, be it an individual stock or an ETF like this, is overbought or oversold. And generally, when the RSI of the asset crosses 80, it's generally indicating that the asset is overbought, that it's kind of in a mania, euphoria. People are piling into it based on the buying momentum. If an asset is under 30 on its RSI, it's a period that it's oversold. So maybe it missed its earnings, maybe the CEO got in trouble, what have you. Maybe you're in a market crash. For example, if you were to pull up the RSI of SPY and the Qs and DIA in 2008, of the NASDAQ in 2000, 2020 and COVID, you would likely see that the RSI of many of the ETFs and individual stocks would have crossed the 30 RSI, would have gone under, maybe it's at 25 or 30. And that might be an opportune time to purchase the asset. So, for example, let's say you love a company and you want to take a position, but you see the RSI is above 80. You might pause and say, you know what, let me put a limit order in, or let me wait a bit, simply because it's showing that it's an overbought. Now, if you love an asset based on your research and it's under 30, you might say, wow, this is a wonderful entry point. it might be worth taking a position here. So, it's not necessarily the indicator for people, but sometimes it can influence or inform a decision. So this is the logic here, and let's just go to, I think I have Fidelity here, just so you can. Let me actually reduce this here. There we go. Let's bring it over there. So again, the relative strength index provides short-term buy and sell signals. Low RSI levels below 30 or generate buy signals. High RSI levels above 70 generate sell signals. I generally use 80. A lot of the Discord strategies are using 79, 80, 81. But again, it's all relative. So they're saying 70. Generally, many people have looked at 80. So yeah, the S&P's 500 RSI suggest stocks would be expensive. So again, this is just from Fidelity here, so you can see a little bit more. But yeah, so back to this here. Let's head back. We're gonna keep jumping from screen to screen here. But what I personally did is I just felt, I have $222,000 in a VIX product, and I just felt that was a little. I won't use the word reckless, but a little concentrated. And so this is what I did personally. I took a little bit of the UVXY, and again, some I went and deleted UVX entirely in the Symphony and replaced with BIL. You could also add VIXY, VIXY, because UVXY is leverage 1.5 times, VIXY is 1-for-1, and BIL is cash. So I could have, for example, added VIXY to this, maybe BIL and VIXY, and remove this entirely. So you can kind of play with it based on your own sensibilities. But yeah, it's just something that I did, and I just felt, look, if I had a $20,000 Composer account and 17 of the 20,000 or 16 of 20,000 was in UVXY, would I have left it? Probably. But just being, what the Discord calls a whale in Composer, which is a 6-figure account, and not only 6 figures, over 200,000. So it wasn't just over 100,000, over 200,000 was in this VIX product. I just felt it was appropriate to do. So, still at the 50%. Now, having said that, let's head back here. Having said that, on a short-term basis, it cost me a certain amount of gains, because as you can see, wow, I made another $1,000 since I started this particular video. UVXY is up right now 4.9%, because all these are 100%. So you can see BIL, do you see it's up 0.1? So anything you see up 0.1 is in BIL. Anything you see up 4.86, 4.9, whatever it was, is in UVXY. So, it cost me money by doing this, but I don't regret it at all. Someone asked me that question. They said, do you regret making these changes? And I don't, just because I feel it's, for me, and then again, this is unique to everyone, appropriate risk management of having, going to cash in this period. So why are people going into the VIX when TQQQ is in that mania euphoria? Based on backtesting, based on historical data, a lot of times then there's going to be a big sell-off, which is going to be increased volatility. So this product is going to jump, as it is. So essentially following historical backtesting and such, up over 5% today. I think it's been up since it went in. It's been up like 15%. I'd have to check on that 100%. But again, even today, it's, almost 5. So, almost 10,000, and just a tremendous, I can't say how happy I am with my Composer account, this year. And last year I compounded capital at 33%. This year I'm at 27 right now, which would annualize out to, 54, 55%, whatever the math is on that. So doesn't mean that will happen. I mean, anything could happen. We have an election coming up. I could be up 27% today, and next month be flat or down 10, 15%. Anything can happen in financial markets. So it's never good to kind of gloat and become arrogant and think that, oh, this is the way it is. But, very, very pleased with the 27% here. Big day today. So, yeah, so that's, and here I'll go here just to kind of break this down. This is This is just a Yahoo Finance chart. I don't know if I can, let's bring it over here. Yahoo Finance chart. And you can see here, it's showing, the VIX was at 85, 80, 88 here, 77. Looks like it's at 77 now. So, and you can follow it here. 30 right here is when something is oversold. And then I have it at 80, this line right here at 80 when it's overbought. So, and I have some other indicators going on here, but yeah, it just kind of gives you a sense. So you can see, like, in it looks like, for example, like in January 3rd, it was down to 42, so it was almost in that oversold. But you can see with the big run up we've had this year, all-time highs and such. So yeah, so that's just kind of what I did, and I feel was appropriate. Did it cost me maybe another $5, $10, $15,000, perhaps? But I just sleep better at nights knowing that I do have that 70,000 in short-term bonds and cash, and even like I said, I'm not even averse to pulling a little bit more off in some of the symphonies, getting down from that 50 to that 45%. Yeah, and then here's the actual product here. You can read about it. It's a ProShares product. You can see, and it's 1.5 times here of the VIX. So again, VIXY is 1-to-1, and then this is a little bit of leverage here for those who like that. So, but we'll see how it plays out. Definitely, we'll continue to update it, and also when basically the symphonies trade out of UVXY. I'll also track that. And just to give you a sense of, Composer versus my vanilla account, this one here, 27% for the year. This one is at 9.85. It's actually a little higher because of the option value. So if you add another 10,000 to this, so let's say it's at 11%, 12%. Versus 27%. Now, granted, this one I'm turning into an income portfolio, but still, you can just see like kind of vanilla portfolio versus a Composer portfolio with a lot of these third generation Discord strategies. And like I said, presently I'm at 116. So anyways, that is it for today. We'll go back here to Composer and just kind of see, look, I think it was at 91 or 93 the last time I was here. So literally every time I'm refreshing, making more and more, another $1,000. So kind of cool to see to that. Now again, it goes the other way on down days, but yeah, I think it was 2.6 when the last time I was here about 2 minutes ago. So see if we hit that 370 today. Cost basis for this year is 290. So between January and June in Composer, right now hitting 79,000, almost $80,000 in gains in this account. Tremendous. So, all right, that is it. Take care. Any questions, comments, feel free to write in. Ciao.